Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of March the 11th, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. But first, I think it is important that we look and get a better understanding of that US non-farm payroll number. Now, the headline number was a shocker at only 20,000 new jobs created, but what we have to look at here more specifically is the U6 number, the broader unemployment. When we look at the broader unemployment rate, the decline of people looking for full-time work was the single biggest decline that I've seen in the history of the U6 number. We've gone from 8.1 all the way down to 7.3. So in actual fact, from that perspective, the unemployment rate along with the average hourly earnings was actually a very, very good report despite that headline number. We also saw the unemployment rate tick down, not up, from 3.9 to 3.8. These are all positive developments for the US dollar and the US economy for that matter. So when we look at the dollar, we can see the anomaly here is that despite that number, the dollar has had a negative reaction. In my respectful opinion, that is because the broader market participants, particularly on the retail side, don't really understand the complexities of that actual announcement. So the dollar is sold off, but what I will point out here is where the dollar sold off. So when we look at where the dollar came under pressure was exactly on the verified resistance level that was determined on December the 14th. That major level of resistance, we can see that the market came up, kissed that area, and then sold off. But in my respectful opinion, any move lower in the dollar is likely going to be corrective in nature. When we look at the global interest rates, we look at the dovish stance of the RBA, the Bank of Canada, and surprisingly, the very dovish rhetoric from the ECB. When we look at all of these things together, it actually points towards the US economy and the US dollar being basically the prettiest horse in the glue factory, in my respectful opinion. So when we look at that right now, if the dollar moves lower, it's likely corrective, but we're going to look at all the different currency pairs and look for contrarian signals. 96.74 is the critical level. When we break this down using our predicted moving average only, we see another critical level at 97.09. However, if we are able to break above this verified resistance zone at 97.70, that could trigger a potential trending move in the dollar. Now, we can assess that the RSI is in overbought territory. It's moving lower, but the dollar's had a nice run up here. So for now, the dollar maintains its overall biased with its monthly cycles, usually strong in the beginning of the month, weaker towards the middle of the month. So we'll see if this one plays out. But when we're looking at actual signals from the verified resistance, when we're identifying double tops and triple tops, I actually had somebody that suggested there's no such thing as a triple top. I still find that statement comical, because the triple top in question that the person had mentioned was actually at this level up here on the S&P 500, that coming in at around 28.21. Now this particular week, and again I'll point out that area has been in place since November the 8th. We then had a follow-up to that on December the 3rd. We came all the way down, a massive sell-off on the S&P, and then we've come right back up to, again, a verified zone of resistance, which ultimately led, as I had discussed several weeks ago in the video, that this was likely, the S&P 500 would likely come under selling pressure near this area. That has come to fruition. We've come up to this area, hit it, and had a massive sell-off from that 28.20 level. So if somebody is telling you that there's no such thing as a triple top or a double top, that is simply not factual. Order flow traders will watch these areas very, very closely for the opportunity to take the easy trade, which is the short. So they push it higher, they make it look like it's bullish, they get the market pundits talking about a bullish equity market, only to get it to slam it lower. Now that doesn't mean the S&P 500 is going to sell right off, but there is certainly enough evidence that there's potentially a global recession is coming. Now, I'm not saying we're in it now, but there's certainly enough evidence out there to suggest it's possible. So looking at the S&P 500, it too has come under significant selling pressure. We're breaking down below that critical vantage point long-term pivot area, daily pivot if you will. Then we've retraced back to that level, kissed it, and continued to move lower. Now, the S&Ps recovered a little bit on Friday, but certainly we've got some problems with that. Now, with gold is actually starting to turn back around. Now, this is something we've been working on in the VantagePoint live training room, certainly something we're going to be working at the live seminar in Tampa at the end of March. We're looking at support building on gold down at this level. This is actually yet another negative for the stock market, that gold is coming back to its yearly opening price, stalling out around that area, and now moving higher. We need to clear the critical vantage point level, 1307. If we clear above that, then longs are absolutely back in play on gold here, which could trigger some further dollar weakness. But again, we have to see how this plays out. We can see that light sweet crude oil also coming under some pressure here, unable to make any gains as the stock market turns lower, tends to drag the prices of oil down with it. So you can see how incredibly important these direct intermarket correlations are, but with the big players being the global equity markets, commodities like oil and gold, and of course the US dollar index itself. So once we've looked at all of these things, it still points towards some US dollar strength despite the sell-off on Friday. And again, in my respectful opinion, the major players that were in the market on Friday to some degree have misinterpreted this labor report. The U3 number is just a silly household survey number. The U6 is far important. The other materials inside that report, that's what we need to be watching. So with this big sell-off on the euro, you can see that we've basically broken through a major support level here at right around the 112.34. We're pushing a little bit lower, but we didn't make a new low on Friday. That doesn't mean we're not going to make a new low next week. So we want to watch this very closely. My concern with Euro US, in far too many cases, what I've seen is a nice move like this down, then we get a big massive bar to the downside off the ECB and a very dovish ECB, but then we don't get any follow through. So what we're looking for here, to be clear, is follow through below this particular level. Now this could suggest that the range on Euro US is broken, but we're stalling out 111.76 and we haven't made a new low. So if we start breaking down below 111.76, that actually could be a leading indicator for a trending move to the downside on Euro US. So watch that level very closely on the downside. And on the top side, we're looking for 112.74 to hold to begin the week. I am anticipating we potentially are going to come up and test this level. When it does, if that level holds, that would present a very good selling opportunity. Now, the Euro-US counterpart, of course, is US-Swiss franc. Very similar trade here. The problem with US-Swiss franc on this particular pair also is that we've got this verified resistance zone at 101.28. You can see, more importantly, how the market has come up on Thursday's bar after the ECB, kiss that verified zone coming from November the 11th, 2018, we've kissed that level to the number and then actually sold off directly from that level. So that's not overly encouraging for longs on US Swiss franc. Now, if gold again continues to move higher, that will actually strengthen the Swiss franc. So be careful with this pair going long where we currently are. We actually are looking for a clean, sustained break. That's what we want here, guys. A sustained break of 101.28 so we can potentially target back towards the 102, maybe even the 103 area. But if we can't get through 101.20, then the probability in trading that we're going to move back towards the mean resistance area is going to be 1.0022 is very high. So again, what you want to do is watch this level. Now remember, this was the breakout level. 1.002 was the breakout level from the verified resistance rate here, but that's only the first level of resistance. We have two other very big ones up here, and this just above 101. So watch this area very closely. Now, with pound dollar going into next week, the pound under pressure with Brexit, but again, I don't see a long-term short on the Great Britain US. I think it will recover probably towards the latter part of next week. But right now, it's still advancing to the downside. So we don't want to fight the current market directional bias. I refuse to use the word trend. We are not trending on this particular pair. We have a very clear identifiable top, which is coming in at 133.39, and the current lower part of that range is coming in at or about the 127.73. We are smack dead in the middle of this range. To begin the week, we should watch this level right here at 129.68 to see if that can hold. But again, the majority of the indicators from VantagePoint are saying we still have more downside on the pound dollar. When we break this down to our key pivot area, you can see how the market is hugging this blue line every day. Short, short, short again here. 4 days in a row. Very, very good trading here. So that key pivot area is 131.10. You want to watch that area very closely to start the week to see if we can hold below that particular area. Now, with the dollar yen for next week, once again, the dollar yen under pressure as the equities drop. The main intermarket correlation here, guys, is of course the correlation between the dollar yen and the S&P 500. The S&P 500 comes under pressure, so does the dollar yen, despite the US dollar strength across the board. So right now, we're holding above 111.02, but if we lose this area, then we are likely going to test the lower part of the verified support range, which is coming in at 110.35. The probability that we come down to that area right now is very high, but we need to watch stocks very closely. If stocks sell off, dollar yen continues to sell off, but if stocks, meaning the S&P 500, recovers, then so will US Japan. So we could have a long here, guys, but when we look at our long predicted, this is our first day. We're closing below 111.40. So to begin the week, we watch the 111.40 area to see if we can continue to hold below that area. And that is what will tell us, not only is dollar yen going lower, but that would indirectly suggest that the S&P 500 is also going lower. Now, as we move into our three main commodity currencies, US CAD, Aussie US, New Zealand US, I can see visually right now that the US CAD is formed some resistance off this particular, I would not necessarily call this a triple top, but there is absolutely resistance up here. Now, again, the mean reversal in price would be back down to the 132.97 area, but a very tall order here. You can see that we've got a sell signal trying to form with the medium term crossing the long predicted difference, but the neural index is not supportive. We are heavily overbought on the predicted RSI, but just because something is overbought or oversold or accumulation, distribution, whatever you want to call it, it really is meaningless, because if the market wants to buy this, they're going to buy that. If stocks keep moving lower and oil keeps moving lower, US Canada is going higher, not lower, regardless of an overbought or oversold signal. So we watch and we lean heavily on the medium term crossing the long predicted difference. That has my attention, and we could have a short trade here towards the middle or latter part of next week. That is absolutely possible. But to start the week, we want to watch this area up here around 134.67 to see if we can push above it. Now, to assist us with that, we bring in our VantagePoint predicted moving average by itself, our daily pivot area. we've been moving up aggressively. That critical level right now is 133.67. Now, I will further point out where we connect the dots to this. The final verified resistance zone right here during this cluster of supply and demand in this particular area, that was a breakout point. So we want to see if we can continue to hold above 133.74. If we can, then US Canada is going higher. But if we slip back inside 133.74, the pressure would then be off the upside and we should start moving lower again. But remember, guys, in order for that to happen, it's not just about the US Canada pair. It's about oil, it's about stocks. We need those two moving higher to assist any move lower on US Canada. Now, with Aussie US and New Zealand US this week, a very similar contrarian signal here on Aussie US, but again, right now, it's corrective in nature. We have critical resistance between 70.65 and 70.93. We need to clear those two particular levels in order for Aussie US to reverse. But what will really help the Aussie, the New Zealand, and the CAD is if stocks and oil move higher. If that happens, then the Aussie should follow it. Now, we've got a very dovish RBA, so that's not helping the stock market moving lower. That's not a positive in the least for the Aussie or the New Zealand or the CAD, right? So we've got to watch, again, stocks very closely. But the key areas to watch, and again, to help simplify it down, just using our long predicted by itself without the black line, just the blue line, you can see how easy it is to trade this strategy that I've discussed by shorting every day. Short it, take your profit. Short it, take your profit. Wash, rinse, and repeat is what I always say here, guys. Very easy trade following this methodology. However, we're getting a warning sign here. The medium term crossing the long term predicted difference to the upside. We've got the neural index is now turned positive, but my concern here is that it's reacting to the minor sell-off on the US dollar on Friday because of the misinterpretation of that non-farm payroll. So we'll keep an eye on this one, but for now, the move higher on Aussie US is corrective in nature. Same as New Zealand. New Zealand's had a big run up to the critical level, 68.08. We're closing 68.02. If I'm correct and the market is misunderstood the payroll number, then this move up here will be very short-lived on New Zealand, and we could have a very good selling opportunity right off the open, or closer to this 68.08 area. But 68.02 on the close, I wouldn't be surprised if we gap down to open the market on Sunday. And again, this presentation is being done on Saturday ahead of the market, so this is not eyewitness trading where we look at the market moving and saying, well, this is what we should do. This is all done. The benefit of the VantagePoint software is we're able to do all of this ahead of the market, not after it's already happened. So with that said, this is the Forex Weekly Outlook for the week of March the 11th, 2019.